London just lost its trading crown to Amsterdam. The city famous for bicycles, canals, and coffee shops now moves more shares than the financial capital of the world. If that doesn't sound like the beginning of the end, buckle up, because it gets so much worse. For 3 centuries, the City of London wasn't just a financial center, it was the financial center. The place where empires were funded, currencies were born, and trillions moved through glass towers like clockwork. But here's what nobody wants to admit. Legacy isn't a business model. You can't deposit nostalgia into a bank account. While Britain spent the last decade polishing its reputation, Singapore was building better infrastructure. While London bragged about history, Dubai was rewriting tax codes. And while the UK voted to take back control, the entire world quietly took control of its money and ran. In 3 years, London's share of global forex trading dropped from 41% to 38%. Sounds small? That's a daily loss of over $2 trillion in volume, more than Canada's entire GDP, every single day. This isn't a conspiracy theory. It's not fear-mongering. It's a masterclass in how to lose a 300-year head start in less than a decade. So how did the once untouchable financial superpower end up here? Let's rewind, and let's be brutally honest. Britain built its dominance on 3 pillars. English as the global language, a time zone bridging New York and Hong Kong, and seamless access to Europe's 500 million consumers. For generations, these felt like birthright, permanent advantages, God-given economic cheat codes. Except they weren't. They were privileges, and privileges have expiration dates. The world learned English. Technology made time zones irrelevant. And that EU access? Well, 52% of voters decided it wasn't worth keeping. But before we get to Brexit, let's talk about the warning signs everyone ignored. By 2015, compliance costs in London were rising faster than profits. Singapore had already started offering tax breaks that made British accountants weep. Dubai was handing out golden visas like party favors, and London's so-called fintech revolution moving slower than the tube during a strike. In 2022, the UK's financial sector still generated $173 billion. Impressive, until you realize that figure has barely moved in 5 years while competitors are posting double-digit growth. The engine that once roared now idles, coughing out nostalgia instead of innovation. Here's the part that stings. This wasn't sudden. Every alarm was flashing red. Analysts wrote reports. Economists gave warnings. The City of London Corporation itself published concerns. But Britain had spent so long at the top, it forgot that altitude doesn't equal safety. And then came the decision that turned cracks into canyons. Brexit was sold as Britain's glorious rebirth, a leap into sovereignty and freedom. In reality, it was more like jumping off a building and calling it flight. The morning after the vote, the City of London woke up to a nightmare it had begged people to avoid. Passporting rights, the golden ticket that let UK banks operate freely across Europe, vanished. Overnight, the rulebook changed, and London wasn't holding the pen anymore. What happened next was financial bloodletting in slow motion. 1.5 trillion in assets didn't just move, they fled to Frankfurt, Paris, Amsterdam, Dublin. By 2021, over 7,000 finance jobs had followed. Traders who once expensed champagne lunches in Canary Wharf were now touring gray Dublin office parks, pretending to be excited. Want irony? Here it is. Brexit was pitched as taking back control, but the City of London didn't take back anything. It lost control of its biggest market, its regulatory influence, and its seamless access to European capital. The campaign promised financial independence. What it delivered was isolation with a side of paperwork. And here's the gut punch. Amsterdam, a city 1/10 the size of London, surpassed it in share trading volume in 2021. The student became the master while the teacher was busy arguing about fish quotas. But Brexit was just the spark. The real disaster? The regulatory circus that followed. Diverging from EU rules sounded brilliant in theory. We'll make our own regulations. Nimble, competitive, British brilliance unleashed. Except in practice, firms now operate under 2 conflicting systems. One for Europe, one for the UK. Double the compliance teams, double the legal fees, double the headaches. Banks despise complexity. They crave stability, predictability, boring dependability. Post-Brexit London became the opposite, a legal maze. that changes every 6 months depending on which minister is trying to look busy. The EU, still nursing its Brexit grudge, refuses to grant the UK long-term equivalence, the regulatory recognition that would smooth everything out. So British finance exists in permanent limbo. It's like being invited to play poker but not being allowed to see the cards, or know if the rules just changed mid-hand. Compliance costs for cross-border operations jumped 15 to 20%. That's the visible damage. The invisible cost? Confidence. Investors don't like uncertainty. They like Switzerland. Boring, stable, predictable Switzerland. While London drowns in consultation papers, Singapore is approving digital banking licenses in weeks. While the UK debates regulatory frameworks, Dubai is live testing blockchain-friendly laws with actual companies. Britain wanted freedom. What it got was a bureaucratic swamp of its own design. And while the country sinks into red tape, the talent that built the city's reputation doesn't run on algorithms and trading platforms. It runs on people. Sharp, ambitious, ruthless people. And right now, the UK is hemorrhaging them at a terrifying rate. Brexit killed free movement, and with it, the talent pipeline that kept London competitive. Hiring a top French analyst now means visas, home office delays, and enough paperwork to kill momentum. Meanwhile, London rents average over $2,000 a month for a one-bedroom. Groceries cost more. Taxes hit harder. And for what? The privilege of navigating post-Brexit chaos? Compare that to Dubai. Zero income tax, year-round sunshine, luxury apartments at half the price, and a government that actually wants you there. Or Singapore, streamlined visas, world-class infrastructure, and a tax rate that makes London look like a charity. The exodus isn't theoretical. Fintech founders are incorporating in Estonia instead of London. Hedge fund traders are accepting New York offers they'd have laughed at 5 years ago. One former derivatives specialist put it simply, London's great if you're already rich. For everyone else, it's a grind with diminishing returns. Since 2020, the UK has recorded a net loss in high-skilled finance migration. These aren't random office workers. These are the people who structured billion-dollar deals, built trading algorithms, and managed sovereign wealth funds. Britain trained them, educated them, built an entire reputation on their brilliance, then made staying feel like punishment. And now they're gone, and someone else is cashing in. For decades, London only worried about one rival, New York, the eternal transatlantic finance battle. But while Britain stared west, predators circled from every other direction. Singapore didn't just rise, it executed a masterclass in economic strategy. Low corporate taxes, political stability, and a time zone that captures both Asian and Western markets. Its assets under management grew 10% annually while London's flatlined. The government actively recruits finance talent with fast-track visas and incentives London can't match. Then there's Dubai, a city that didn't exist as a financial hub 20 years ago now rivals London in specific sectors. The Dubai International Financial Center offers zero income tax, modern infrastructure, and regulation designed for crypto and fintech. In 2023 alone, over 500 new finance firms registered there. These aren't small startups. These are established players hedging against European instability. And Amsterdam. Let's talk about Amsterdam. The city of bicycles and 17th-century canals just stole London's equity trading crown. It now processes more share trades than the UK. How? By staying in the EU, upgrading tech infrastructure, and not shooting itself in the economic face. Even New York, the old rival, isn't competing anymore. It's consolidating dominance. Post-Brexit, Wall Street convinced dozens of firms to shift headquarters stateside. The battle's over. America won by default. London thought it was playing chess against New York. Turns out it was playing musical chairs. And the music stopped. Empires rarely collapse from one fatal blow. They die from 1,000 cuts nobody bothered to bandage. And right now, London is bleeding out from a dozen small failures that compound into catastrophe. Start with infrastructure. While Asia moves money in real time with instant payment systems, Britain's financial plumbing still runs on systems built when fax machines were cutting edge. Office space in central London costs over $100 per square foot, nearly triple what you'd pay in Frankfurt. That's not premium pricing. That's extortion. Energy costs have spiked over 50% since the Ukraine war, and there's no relief in sight. Productivity has stagnated. Meanwhile, competitors invest in the future. Singapore launches digital banking frameworks. Dubai writes crypto-friendly legislation. Switzerland upgrades privacy tech. London. London holds committee meetings about holding committee meetings about potential frameworks for future discussions on maybe updating something eventually. No single headline screams disaster, but together it's a slow suffocation. The financial equivalent of dying from 1,000 paper cuts while insisting you're still winning the fight. And then came the scandals that made the world ask the question no financial center can afford. Can we even trust them? In finance, trust is the only currency that matters. And in 2022, Britain set its credibility on fire and live-streamed it to the world. The Liz Truss mini-budget wasn't just bad policy, it was a masterclass in destroying confidence. In 1 week, her government crashed the pound, spooked bond markets, and triggered a pension fund crisis so severe the Bank of England had to stage an emergency intervention. Nothing says safe financial haven quite like your currency collapsing faster than a meme stock. Then came the LDI crisis, a financial engineering disaster that nearly imploded the entire UK pension system. The world watched in real time as Britain's central bank had to choose between inflation targets and preventing systemic collapse. Guess which one wins when the building's on fire? And while that circus played out, London's other dirty secret kept surfacing, its role as the global laundromat for questionable money. Russian oligarchs, Gulf royals, corrupt officials. London's luxury property market became famous for shell companies and cash buyers with undisclosed sources of wealth. After the Truss disaster, billions quietly shifted to Zurich and Singapore. One asset manager told the Financial Times, "Why risk London when Switzerland is boring and stable? In finance, boring is beautiful. Chaos is death." Britain didn't just lose money. It lost the one thing you can never print more of: credibility. When the City of London stumbles, Britain doesn't just trip, it fractures. Finance contributes over 10% of UK GDP. It funds the NHS, pays for schools, keeps infrastructure from total collapse. Every coffee shop near a trading floor, every law firm servicing banks, every tech startup building financial software, they all feed off the city's energy. Now imagine that engine sputtering. A 20% decline in financial services could cost $35 billion annually in tax revenue. That's tens of thousands of teachers, nurses, infrastructure projects gone. And it's not just London that suffers. The city's wealth subsidizes the rest of the country. When London bleeds, Manchester feels it. Birmingham feels it. Newcastle feels it. Meanwhile, Singapore's finance boom lifts the entire nation. Dubai's growth funds new metro lines and free zones. But when London contracts, Britain fractures. The wealth gap widens. Regional inequality deepens. Social services stretch thinner. This isn't abstract economics. It's jobs, futures, and communities unraveling one closed trading desk at a time. But here's the cruel irony. While Britain counts its losses, the rest of the world is counting its winnings. The $1.5 trillion that left London didn't evaporate. It just found new homes. Frankfurt gained banking operations. Paris secured insurance giants. Amsterdam captured trading volume. Dublin became the EU gateway for American firms that used to use London. In Asia, Singapore is vacuuming up wealth management that once sat in Mayfair offices. Private banks there now manage trillions, growing at rates London can't dream of. Dubai positions itself as the bridge between East and West, offering tax advantages and political neutrality. Even smaller players are feasting on scraps. Luxembourg, Zurich, Hong Kong, everyone's getting a piece of what Britain thought was eternally theirs. Geopolitics is zero-sum. There's no participation trophy for former empires. London's loss is everyone else's gain, and they're not sending thank you notes. They're sending moving trucks for the next wave of talent and capital. The UK wanted to go global. Instead, it went isolated while the world went hyper-connected. And now the empire that once shaped the financial world can't even protect its home turf. So here we are. The UK stands at a crossroads, and every day of indecision is another billion managed elsewhere. The fall isn't inevitable yet. London still has deep legal expertise, a massive talent pool, and infrastructure that took centuries to build. It could dominate green finance and lead the global transition to sustainable investment. It could become the fintech capital by offering regulatory clarity instead of chaos. It could even strike partial deals with the EU, restoring some lost trust without sacrificing sovereignty. The tools are there. The question is whether Britain has the courage to use them. Because right now, while London debates, Singapore executes. While Parliament consults, Dubai legislates. While Britain clings to nostalgia, competitors build the future. The British Empire once ruled half the world. Now it can't even hold half the forex market. Legacy isn't inherited, it's earned every single day. And right now, the UK isn't investing in its future. It's spending its inheritance. And when that runs out, the world won't wait. It'll just move on like it already has.